Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Milchmauskas. Today's the 23rd of May 2019, so welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. There's always a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now, the first one I want to touch on here is the DAX, the German index here. So I've talked about this one this morning, and I was telling you guys to keep a close eye on it because it was already sliding lower, and the cash index was already showing us that we will have this nice gap to the downside, and as you can see, it continued sliding today. Of course, we did get some manufacturing PMI numbers here from the Eurozone, and they came out as a disappointment and below expectations. So basically, that also helped the German index to slide further down. The German manufacturing figures were at a disappointment as well. So basically, all this kind of is adding up here, and as you can see, the index slid lower. It managed to break below this upside support line that I was talking about, but still, it's now kind of balancing around it. So for now, we're going to remain somewhat neutral. We're going to keep a close eye on, see where the day is going to close today. And if we look at the daily chart, so this might be a little bit easier. So as you can see, we do have this, like I said, this upside support line taken from the lowest point of December. And what we need here is we need to see that nice, good, clear break and a close below this upside support line in order to kind of consider further declines. Of course, at this point in time, it does look negative. It does look doesn't look very promising. Let's put it that way. But just for that better assurance, just for that better confirmation, ideally, like I said, we would like to see that daily candle closing below this upside support line. So we still have time. Let's see if it actually happens. If it doesn't close there, well, we will remain somewhat neutral for now. We're just going to continue observing it and see how tomorrow's day is gonna play out. Because if it, let's say, rebounds here and pushes higher, okay, that's great for the bulls. We may see this one traveling again and testing again this long-term downside resistance line that I talked about several times in my previous videos. But of course, but before we could consider higher levels again, we ideally, as I said this morning, we need to see a nice good push back above the 12,320 zone first, and then we'll aim for higher levels like the high of the 3rd of May here, around the 12,440. But if that fails to withhold, yep, further acceleration to the upside could be possible. But for now, guys, certainly be very careful, be very cautious on this one. Like I said, keep your eyes on some of these key lines. And first, what we're going to do here is, of course, keep a close eye on this upside support line and see how the index is going to perform around there. If it closes below, then that's great, that's wonderful. We could see further declines, and yep, we'll take it from there. Jumping into another index which you probably don't look at very often, and that's the Australian index here. And this is the little idea that we threw out here today on our page here on TradingView. And this is basically the idea. We threw out the daily chart showing that this is the interesting bit, is that yesterday the index closed the day with a nice doji candle here, as you can see, and of course, according to all the textbooks, this could be seen as a reversal signal. Today we saw the candle, the daily candle, already sliding to the downside. It's already in the negative territory. The index itself is already in the negative territory. That's of course the cash index. And we could see this one sliding further down. In a way, what we're going to do here is we're going to wait for a clear break and a close of at least of the 4-hour candle below this area right here around the 6,485. Then we will consider further declines. And here, as you can see, we do have a bit of a let's say a drastic one, a drastic price target, but we'll just keep it. We'll just go along and see how it's going to perform. For now, this is just an idea. Again, before we can consider such a move here, we need to see, ideally, the starting point is to see a nice good break and a close of at least of a 4-hour candle below the 6,485 zone, and then we'll just take it from there. The next potential good area of support could be around the 6,430 mark, near by the low of the 20th of May, and then we'll just take it from there, see if it actually wants to continue dropping further. If it does, then that's great for the bears. We could consider a further slide, maybe even actually going all the way here towards the 6,347 zone, marked by the low of the 17th of May. So we will abandon this idea if we see a push above the 6,525 zone, basically above these recent highs, this week's highs, and then we will, if we see a push above this, then yep, the index in a way could travel higher, would confirm a forthcoming higher high, and we could then aim for the highs that we saw here last time in, and let me just jump into a daily chart here, last time in 2017. So to be honest, I need to even drop into a weekly chart for this one. So basically this is what I'm talking about. So in a way, if we do see a push above that 6,525 zone, this could open the path towards these highs that we saw here around the December time of 2007. So keep your eyes on this one. Very interesting index, very interesting developments here, but again, like I said, ideally we will consider the downside if we see a close of the 4-hour candle below the 6,485 zone. So keep your eyes on this one. Euro GBP, very quickly now, this one's finally giving some breathing space for the bears. Today it managed to push higher. It reached the 0.8839 area, approximately there, near the highs of yesterday, but as you can see, it quickly reversed back down and now traveled lower and currently sits below its below the pivot, below its day's pivot, and almost managed to reach this key area of support here near the 0.8790. Now this is, for us, this is that breakout point here where we could consider further declines, because this way, if we see a drop below the 0.8790, this would also place the pair below the 21 EMA here, shown as the yellow line, and then we will initially target the 0.8748, but slightly below that we do have the 0.8725 zone, which is a very good potential area of support, and then we'll just take it from there, see how it's going to perform. In case this decides to reverse back to the upside, and if it starts breaking the 0.8839 zone, now this is where it could turn out to be ugly for the bears, and this would confirm a forthcoming higher high, and we could then even target the go even higher, initially aiming for the 0.8860, but if we do reach this level, then we'll just take it from there, see what it wants to do. If that fails to withhold, then yep, the 0.89 level could be back on the table. So that's why, guys, for now, be very careful here. Yes, it is kind of trying to push lower, but let's see if the bears actually have enough steam to push this one further down. And as as I said, we need to see that nice good break and ideally a close of the 4-hour candle below the 0.8790 level first. Jumping into another pair, which I talked about this morning, and this is the AUD CAD. Now this is also something that we've posted here on TradingView, and this was before it actually broke above this key area of resistance, this one right here that I'm talking about, around the 0.9250. so it managed to break it to the upside. Yes, that's great. We could see this one traveling further up. Now what we are targeting here is this downside resistance line now. So this downside resistance line has been running here from around the highs of April 17th. In a way, this could be our nice good target. Also, this area would be around the levels like the 0.9310 and the 0.9315. so this little potential resistance area could play out, especially if, let's say, this 4-hour candle remains above this 0.9250 level. If so, then yep, we could consider a further move higher here. But if this decides to reverse back down and drops back below the 0.9250, well, I mean, this could turn out to be kind of ugly for the bulls. But the only thing is that we will only consider lower areas if we see a drop below these recent lows, or should I say the yesterday's lows, near the 0.9195, and only then we will consider further declines. For now, this little territory for us would be a bit of a neutral one. We'll just continue observing the price action, but like I said, if it starts dropping below the 0.9195, this would confirm a forthcoming lower low, and we could then target the 0.9168 area or even below that, just to show you what that level was here in the past. I need to kind of scroll back, way back here to the October, to the 24th of October 2018. So basically good potential area of support, and we'll take it from there, see what it wants to do further then. But then again, like I said, I'll repeat myself, we will only consider the downside if we see a drop below the 0.9195. For now, this is looking somewhat more bullish than bearish, and yep, we could see this one traveling a little bit higher. USD CAD. Now this is this morning I was talking about this one, and basically this is one of the craziest pairs out there. So for now, basically it's now pushing above the 1.3450. This is what I was talking about this morning. Basically, I was telling you guys to keep a close eye on this one, because if we see a nice good break and a close above this 1.3450, then yep, we could see a continuation here, a continuation push to the upside. Now we've managed to close way above this. Certainly did try to retrace a little bit, but kind of failed to even to reach this 1.3450, and you can see the bulls kind of picked up on that very quickly, and then now continue to push this one higher. Now our target here is around the 1.35 level. Around here we'll be very cautious, because we might get something similar as we did last week here, where we did have a nice break above this 1.35 level, but kind of, as you can see, the 4-hour candle never closed above it. So that's why we're gonna target the 1.35 for now. If we see the candle failing to close above the 1.35 zone, then we may see maybe a small correction here back to the downside. We could see something like this happening. Again, the 1.3450 level for us is going to be the important one to watch. But now, if we start seeing another slide below the 1.3450, now this is where we will aim for slightly lower areas again, because just to kind of remind you guys that in a way you can see it yourself as well, that the pair is trading within this little range here, between the 1.3370 and the 1.35 levels, approximately between those. So we're going to continue observing this range. So in a way, as I said, if we do see a drop back below the 1.3450, we may see this one sliding back down again, maybe even again testing this lower side of the range, and then we'll take it from there, see what it wants to do. But for now it is holding its path further north. Again, like I said, we are targeting the 1.35 level. If we do see a hit We'll see how the 4-hour candle wants to close there. I mean, if it wants to close above it, if it does that, then that's great for the bulls. We could see this one traveling further up here, potentially aiming for the 1.3522. Now, I do understand it's only about 22 pips away from this level, but still a very good potential area of resistance could be seen here. So that's why we're going to be very cautious about it. Yep, we'll just take it from there, see if it actually wants to continue traveling higher or not. But for now, from the very, very short-term perspective, the 1.35 level, that's what we're watching. If we see a close below it, then we may see a small correction back to the downside. But if that little correction will lead to a break below the 1.3450 again, then yep, we will aim for slightly lower levels. Okay guys, I hope you found it useful. Thank you very much for watching and listening, and if you want to join me tomorrow morning at my Traders Espresso, as always, that's 6 o'clock GMT time. For now, I hope you have a wonderful and a beautiful evening, guys, and I'll see you later. Bye bye.